Hi, it's Larry Gaines from Power Cycle Trading. This is the daily aftermarket outlook for January 16th, 2013. Well, the market, is just really hanging in there. You can see here's the S&P futures, just holding above the 8 EMA right here, consolidating at this 1460 level. So that's a good thing. It's consolidating here, so potential to have a bull flag here where it can break to the upside. But still be cautious because what I'm going to show you next is the VIX index and the dollar and the euro dollar. So there's some correlations going on here which could have an effect on the equity markets, and I'll show you those next. Here are a couple of correlations that seem a little bit out of place. This is the 10-year U.S. Treasury note, and generally when the bonds are going up, you'll have equities going down because there's an inverse correlation. So as bonds go up, it's a flight to safer assets, so some of the rotation comes out of equity into bonds. But right now you're having bonds go up and equities go up, so a little bit out of kilter there. So if bonds keep moving up, the bond guys usually are right over the long term. So if bonds do keep moving higher, it should eventually have an effect on equities starting to rotate cash out of equity or out of stocks into bonds, and you should see that correlation push back equities a bit. That tends to what is what happens, but it hasn't happened yet. Now, another thing to keep an eye on is the dollar index. So again, a correlation. If the dollar goes up, assets, commodities are priced in dollars, so those will begin to come back off. So if the dollar starts to break above these moving averages and starts moving higher, we've had a pretty good pullback here on the dollar. It's come up here and come back down. But if it does start to correct back up, you'll see some of the commodities like gold and crude start to push back and pull back, which could then affect also the other equities as well. So keep an eye on the dollar. Now, another part of this correlation is the euro. You can see that the euro's had a huge move up, and this whole movement to the upside, we've also had a nice move to U.S. equities. So as the euro's been going up, it's been pushing the dollar down, which is good for things that are priced in U.S. dollars, which also drives our equity market. But you've seen the euro correct back here today, yesterday and today, back to this 8 EMA. So if this thing keeps correcting down, you're going to see the dollar keep moving up, and that's going to eventually have some impact on the equities. So keep an eye on it. Now, the other thing to keep in touch with is the VIX. This is the VIX. It's volatility index to measure the S&P 500. You can see it's at extreme lows here. So if there's anything that happens, the market's complacent. The volatility is extremely low. So if there's any hiccup in the market or whatever, you never know what's going to happen, come out. You could see a major spike to the upside on the VIX, which would be a major push to equities to the downside. Now here's the VIX index on a weekly time frame. You can see it's just been buried down here. So extreme lows. So be aware of this. Don't get too over leveraged in this market. Things look good if you look at the various sectors like the S&P 500. The Nasdaq's looking okay. The transports look great. The Russell looks great, but be careful. Let me show you those sectors real quick. Here's the Russell 2000. I mean, it's just had a tremendous move to the upside, broken a lot of these, new 52-week highs here. So very overextended. So if anything does happen with any of these correlations that I was showing you, you could see a pretty quick pullback here to 862, and then down to 830 in that level. That's the Russell 2000. Now the other thing that's been on a tear, this is the ETF for the Dow Jones Transports, and it has just rocketed up. It broke through here and just rocketed to the upside here. It's right into the highs of 101.60. This was the high back that it put in back in July of 2011. So you're coming into some really lofty territories here. Huge extension up. This is good for the markets when you have the transports moving to the upside. that says that the potential or the economic outlook is good because transportation's picking up, demand's picking up, so they have to travel, move goods around. But this is a way overextension. You can see when you have these extensions like this, it's kind of like a blow off top. So careful here. VIX is low. These things are getting a little bit overdone, so could be setting up for a correction here in the next few days. But overall the trend is still up. So just a warning to beware. Now here's the S&P 500 cash on the intermediate term time frame. The power cycle model is long, but you can see how sideways the action is. I mean, it hardly went anywhere today. So it's consolidating, but it's having trouble moving to the upside. Here's the S&P 500 cash on the daily or medium term time frame. Our system still has it long, but you can see it's consolidating sideways. You're getting up to the 161.80, extension up here, holding sideways, but really not going anywhere. It needs some kind of catalyst to get it to the next leg up, but still holding up. But with the other factors I showed you, be cautious. Now this is the NASDAQ 100 based on a 60-minute time frame, intermediate term time frame. It had a pretty good move to the upside and downside today. Actually, we came in on on the 15th. Our system went long, then it went short today early, then it went long again at 0800 Central, and then today after the close it's now short. So this movement was pretty much off the back of Apple, which I'll show you next. Now this is just a quick look at the NASDAQ 100, the daily medium-term time frame. Our trading model still now it's gone neutral. So it was long, it's been bouncing around here, but currently now it's back to neutral. But you can see it's consolidating sideways right above this 2713 and right on the 8 EMA. So it's having a hard time, could not really get back above this 127.20, the extension, and you can see that it's pulled back and just back into these moving averages. So this is all based on pretty much Apple today, and I'll show you that now. Now here's Apple. Yesterday, it made lows down in the 483 area, and then today it gapped open to the upside. There were some positive comments made by a technical analyst, and the market opened, gapped up, and then came in to try to fill part of this gap at 507.82 up into the gap fill area up here around 517. Got into 510 and then pulled back towards the close. System's long, but had a big move up which pushed the NASDAQ. But you can see from the other two charts, everything else was pretty sideways. This is mostly Apple action. Now on Friday, there's option expiration, and I'm going to show you what's going to probably drive Apple now until the rest of the week. Here's a look at the Apple daily chart. You can see it stopped pretty much today right at the 8 EMA. Came into resistance there. Try to fill the rest of this gap tomorrow up to about 515, 517. But Friday there's going to be a lot of action at the 500 strike. So I think there's a good probability that's going to gravitate back down towards 500 going into Friday. Let me show you why. This is the option chain for Apple, and this is for expiration on Friday, the January 19th. You look here at the 500 strike right there. You come across here to the open interest. Huge volume of open interest on the calls at 36,000 contracts, and then if you go over to the 500 to the puts, tremendous open interest there at 33,000. So with all this activity at the 500, there's a high probability it's going to pin somewhere around that 500, or at least get back to 500. So you're only at 506 right now. It could possibly fill that gap, and then you could see it pull back down into 500, close somewhere around 500 on Friday. That's a high probability outcome for pinning on Friday. Now this is our new scanning tool. This is based on our power cycle trading model. This is a volatility squeeze scanning screening tool that we developed. And the first thing that stands out here, I'm looking for possible breakout trades. If you want something to take a look at for tomorrow for a potential break to the downside, look at EXPD, and that is the Expeditors International Take a look at that. It's in a squeeze right now on the 15, 30, and 60-minute time frame, and showing this red means, based on our model, that it's a potential for it to break to the downside based on this volatility squeeze setup. So keep an eye on that. Good luck trading, and I will talk to you in the next day. Just a real quick note here, though. If you've not received my free ebook, please go to my website, powercycletrading.com. Put your name and email address in here, and you can download this free ebook on futures trading. So let me show you that URL real quick. Just go here to powercycletrading.com. You can get that ebook on futures or my ebook, or both, on 15 top options trading strategies. So good luck trading, and take advantage of these ebooks.